Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about how to level up your trading in 2023. Now, we'll be talking about some technicals, we'll be talking about routine, mindset, a couple of other things, all the essentials that you need to level up your trading and progress your trading journey further in 2023. If you are new to the channel, make sure you do like and subscribe. It really does help out the channel. Hit the bell so you don't miss out on any uploads. But guys, without further ado, let's get into the video. Okay guys, so the first step to level up your trading in 2023 is to shift your mindset from focusing on the short term to focusing on the long term. And as we all know, mindset and psychology is a vital component in the success of our trading. And a lot of traders, especially new traders, are guilty of focusing on the short term, the next trade, the next week, the next month. We want to be focused on the long term. 2023, we want to be walking out of 2023 with a profit. And if you focus on the fluctuations of your equity throughout the year, you'll probably end up driving yourself crazy. So as a result, we're focusing on the long term. Say if you've got a goal of 5% a month, so by the end of the year, you want to average out around 60% a month, obviously with 12 months. But not every month will be 5%. Some months will be 2%, some months will be 8%, some months will be 5%, 4.5%, 5.5%. It will fluctuate as market conditions fluctuate, which we'll speak on later in the video. And as your trading performance will fluctuate, you won't always hit the 5% mark. Sometimes you will do better and sometimes you'll do worse. But at the end of the year, we want to be seeing that 60% mark. 60% profit. So as a result, do not focus on the next trade, don't focus on the next week, even the next month. Focus if you want to by quarter, but really focus by the end of the year. As long as you've got a solid strategy in place, your goal, your main objective should just be carrying out every single trade that fits your plan. And hopefully if you back tested and you know the results you should be getting, by the end of the year, you should be getting that 60% that you're after. But instead of focusing on that, a lot of people will be focusing on the bad trade they've just had, the bad week they've just had, or the bad month. And as a result, that will affect them emotionally. And as a result, they will either try to manipulate the strategy to try and change it, or just find a different strategy altogether. And this will just slow down the growth of them as a trader. So my biggest advice to you is to shift your mindset from the short term and focus on the long term. If you had a bad week, a bad trade, a bad month, it doesn't really matter in the whole scale of things. In 2023, you've got 12 months. So what if you had a bad month? So what if you had a bad quarter? There's still 3 other quarters to make up for that bad quarter. So focus on the long term and hopefully your results will show through. Okay, so step 2 on how to level up your trading in 2023 is to reflect over your past trades. Because if your trading results aren't where you want them to be, then I can guarantee you by the end of 2023, your results will be in the exact same place if you haven't changed anything. This is because history has a tendency of repeating itself. Now, a lot of people will be wondering, what do I change? Well, the answer is I don't know, because what you need to change could be different between what someone else needs to change and what I need to change to improve my trading further as well. So as a result, we need to reflect over our personal trades and look for themes, look for patterns in your losing trades and patterns in your winning trades. I'm sure we're all full aware of the 80-20 rule. 80% of the outcome is normally due to 20% of the causes, and this is very true in trading. You know, what trades are performing better than others, what trades are doing very, very well. Find out what pattern it is. It could be, a certain chart pattern, it could be a time of day, it could be a particular day of the week, it could be a particular pair, whatever it is, a particular entry method, whatever it is, focus on that pattern. And in 2023, look to double down on that. And also look at your losers. What patterns are happening in your losers? Are you taking 50% or 40% of your losers on Mondays? If that's the case, do not trade on Mondays. Learn the patterns within your losers, and then whatever it is, make that your objective to not do that in 2023, and obviously focus on the pattern that makes your trades work better. And doing by this will have an exponential effect on your trading and will definitely change your results from this time into this time next year. And at the time of recording this, we still do have a few days left of the year, so this is a perfect time to start slowing down your trading and start focusing on your results, start focusing on your losers, start focusing on your winners, and really start to reflect and study yourself as a trader and also your performance as well. And whatever you learn, take this knowledge into 2023 and make it right at the top of your to-do list to improve your trading. Now moving on to step number 3, focusing more on the technical side on how to improve your trading in 2023. is to focus on learning how to adapt yourself to different market conditions and different market cycles. Now, I'm including this topic because I feel like it's not spoken about enough, and I feel like this is the main reason why a lot of people end up changing their strategies and jumping from ship to ship trying to find the holy grail, because they're not aware that markets change all the time. One condition could be very, very trending and then it can go choppy. In fact, for example, let's say you have the best trend trading strategy in the world. Your results be fantastic during trend market conditions, but during choppy conditions, which the market is 70 to 80% of the time is choppy, is ranging, your results will be very, very poor. So as a result, you have to know when to trade, and a person who is just consistently applying the same trend trading strategy will do well when the market is trending. They'll have a good month or something, achieving a really high percentage, and the following month market conditions change and then they apply the same strategy. Maybe they're overconfident and they could really do damage to their account. So you have to know when to apply the strategy and when not to apply the strategy, or have a second strategy in place for when the market conditions change. You have a strategy for when the market is trending and a strategy for when the market is choppy, ranging, moving sideways. This will help you navigate both the trending and the ranging and help you stay afloat and have a bit more of a consistent results to your trading. Because if you're focusing on just trending markets or just choppy markets, there will be periods where you do have a lot more drawdown, and that's simply because the market conditions have changed. I'm going to show you guys some examples on the charts now. Okay, right guys, so welcome to the chart. So as you can see, I've got 3 different sections here, each representing a different market condition. On the left we've got strong trend, middle we've got light trend, on the right we've got consolidation, and I'm just going to talk you through different technical aspects and how we can navigate these conditions. If you want to find out more strategies based on these market conditions, check out my Forex education playlist. I do have information on that. But on the strong trend, for example, let's say if we're talking about break and retest, just this generic break and retest of that prior low. We do have a good probability of the market respecting this prior low here and continue the trend. Why? Because there's a lot of momentum in the market currently, and there's a good chance we'll probably form a lower high and look to continue our trend. However, if we take the same break and retest and we apply it into this prior low here, you can see it doesn't work out too well. Reason being, the pullback's a lot more aggressive. The market's still bearish, still a trend, but just a weaker trend. The pullbacks are more aggressive. We're not seeing as strong impulsive legs as well. So most likely the market's gonna have a deeper pullback than the prior swing low. So in this case, trend lines using fibs, into the 0.618, 0.786, they work a lot better in this case scenario than looking for the break and retest. And on the right, the consolidation, break and retest do work very well. We want price to be breaking out the highs and breaking out the lows, waiting for those breakouts, the retest of the range. Those patterns work a lot better, and you wouldn't want to use break and retest on these minor lower highs and minor highs here because they're not very meaningful and you're in the middle of a range. So a break and retest won't work too well there, but if you compare it to a strong trend, it will work a lot better. So a lot of people, they're getting great results in trending markets, then the market condition changes into light trending or consolidation, and then start taking trades that don't really make too much sense based on the conditions. So my advice to you would be understand the condition. As soon as you get into the chart, write down the condition, the current condition of the market, and justify if it's time to be using break and retest strategies or breakout strategies or trend lines or whatever is in your plan. Because just understand the conditions, can make sure you kind of level out your results, so you don't have a particularly good month and a very bad month. It's kind of a bit more leveled out because you're kind of adapting to the conditions of the market. Okay, so now on to step number 4 on how to improve your trading in 2023 is to successfully backtest, forward test, record as much data as possible on your trading strategy. And you want to make sure this is a habit. You want to make sure it's an ongoing process. You don't want to be thinking, okay, I've done enough testing, I can see the strategy is profitable, let me trade the live markets. No, you want to be consistently back testing and consistently forward testing, always practicing and improving your strategy. I say this because if you compare this to athletes and professional athletes, once they become professional and they've got the skill set to, play football, for example, they don't stop training and just play the live games. They're consistently training during the week and playing their games on the weekend. And this is the exact same for us traders as well. We play our games, matches during the week when the market is open, and we practice during the weekend when we back test, collect data, improve our strategy, or at least maintain our strategy and just improve our kind of reaction in the market. Because you want to be in a situation where you look at the charts, you're looking for your setup, exactly what you're wanting to see, and if it's there, cool, we take a trade, and if it's there, we look to move on. You don't want to be umming and ahhing and thinking, is that trade, well, it kind of fits my plan, or it kind of doesn't, or it ticks 3 boxes but not 4. You don't want to be in that situation. You want to be, coming to the charts and knowing exactly what you're looking for. And the only way to do this is by consistently trading these setups time and time again. So it's just a habit in your head, and you strengthen those neural pathways. So as soon as when you come into the chart, it's an easy process to follow. And I've had a few people ask me how many trades should they back test, and I say as a bare minimum, 100, 200 bare minimum, because like we spoke about earlier, different market conditions exist. You want to see how your strategy performs in different market conditions, so you know when to trade, when to double down, when to hold back. So I say at least 100 to 200 trades. Again, like I said, it's an ongoing process. You want to be sure you're always adding to this, whether you're trying to learn a different strategy, trying to implement some new features into your existing strategy, or just trying to make sure your existing strategy becomes second nature. You always want to be doing this continuously, whether on the weekends, on the evenings, on the mornings, or whenever you have time. But make sure it's a habit and you're consistently always back testing and practicing your strategy. And now last but definitely not least, the fifth and final step to improve your trading in 2023 is your routine. Now, us humans, we live very habitual lives, whether we're aware of it or we're not, whether we like it or not, we live very habitual lives. We have patterns and routines in our subconscious and our conscious, and we have to be able to identify if these routines currently serve us or if they don't. So what I want you to do is to go through your average day in 2022. What is your average day in 2022? And see if that average day helps you, benefits you, or keeps you stagnant, or actually makes it worse. Write the things which help you and write the things which don't help you. And once you identify the things that help you and the things that don't help you, try and get rid of the things that don't help you. Obviously, it's going to be difficult to do it in one go, but try and slowly get rid of them as time progresses in 2023, and obviously focus a lot on the things that do help you. And also additionally, look at adding things to that routine. Things that are not too crazy. I'm not saying do 200 push-ups in the morning and go run a mile, whatever, do something crazy. Just something that slowly improves you as the year progresses, from January 1st to December the 31st, something that if you do, it doesn't even have to be every day, every other day, or at least every week or something like that, by the end of the year, it improves you as a person. Because a lot of people think, in the markets, they're going to be very, very surgical, very detailed, organized, disciplined, but in their actual lives, they're none of those things. I've experienced that firsthand. I've been very, very messy with my bedroom, and then I expect to be very clean and tidy on the charts. It doesn't work. That will always creep up into my trading. If I'm a messy person in real life, I'll be messy on the charts. And if I'm not organized in real life, I will not be organized in the charts. So you have to build a routine that makes you organized in the charts and as life. In a life as a whole. So it's difficult to do, but we have the whole year to do it and the rest of our lives to do it, quite frankly, as well. So try and pick things, very, very small things you can add to the routine that will help you in the charts and obviously help you in life as in general, and make sure that you can add to it as well. So say for January you add something, and then February you add something, and then March you add something. So you kind of a slow, kind of an exponential kind of graph on how we can improve our trading and our lives at the exact same time. And when it comes to your trading, you want to have a solid routine with that as well. You want to know exactly what you're doing from the start of the day to the end of the day. What time do you wake up? When are you looking at the charts? Are you doing your analysis when you go into the charts, or have you done your analysis the night before? What times are you trading? What's your trading window? When do you stop looking at the charts? When do you back test? When do you journal? Do you look at the charts at the end of the day to predict what's going to happen the next day, or do you just wait for the morning? You need to have all this planned out on the weekend as well, so you can have a plan to stick to, and all you have to do is just try and stick to it as much as possible. Again, no one's perfect. I'm not expecting you to create a routine and then be consistent with that routine 100% of the year. If you are, fantastic, but life happens, things happen, and if you could just aim for 70-75%, that's a great step in the right direction, because by the end of the year you'll be 70-75% better than you were when you started the year. So don't be too hard on yourself if you're not completely consistent or complete discipline. Everyone slips up, I slip up, everyone slips up. So don't be too hard on yourself, but make sure you do have a routine in place so you have something to follow. and then all you have to do is follow it. And speaking of following, guys, we have come to the end of the video, so why not check out my Instagram and give me a cheeky little follow as well. But thank you guys for watching the video. Again, this is kind of a nutshell on the 5 most important things I feel like every trader should be looking at going into the year ahead. If I missed something out, or if you have any questions, please be sure to leave a comment down below. If you have enjoyed the video, please do leave a like, subscribe if you haven't done already. But guys, have a fantastic day, and I'll catch you all in the next one.